All right, everybody. Good morning. You guys should be able to hear me. Looks like the red bar is way up. Ended up having to update the sound software, the headset software, so I had to like readjust some of the settings. Don't know. Think I know what it sounds like, but it is definitely high right now. The red, it's kind of like, it's not only that high. So hopefully I'm not blowing anybody's ears out. Hopefully it is. Actually, I think I don't know if I have it on loud or soft. I'm not sure today. But let me know how the sound is, guys. If I need to adjust it, I will go ahead and adjust it for you guys, so don't blow up your ears for the morning. Voice is still not fully recovered. Obviously, I'm going for the backup for James Earl. Gotta get in there, and I hear they're looking for a new Darth Vader voice, so I'm going for it. I'm doing it, guys. I'm gonna make the leap. I'm gonna burn the ships. Going all out. I just want to be able to talk regular again. And I don't even have practice this week, but that's the crazy part. It's like, thank God we got no practice. These tournaments are killer, man. They're killing me. All right, good. Thanks, guys. All right, so hopefully you guys listened to the Nadex presentation yesterday where I challenged everybody to go out there and find a position in the Aussie, and we talked about even the direction we were supposed to go in and about using shorter term binaries, and hopefully everybody took my advice and got a piece of that. Wasn't a huge drop, but again, it did drop about about 5 strikes to the downside. So some definite opportunity in there. Hopefully one of the people, I think we ended up having like 50, I don't know. I looked over at one point, it was like 53, 57, mid to upper 50s of people. So we'll see how many people actually took those. We'll see how many thank yous I get next week. But yeah, I can't really give trade recommendations out on there. So you guys know, I was like, go to demo, look at the 2 hours, look at right before the time, look for spikes. They both did it. Yeah. Anyway, so in the last 24 hours, we've definitely had some movement in the markets. Now, most of it actually has been situated around the pound. And again, we saw pound strength yesterday as well. And again, it's kind of the pop back of what we had the week prior, where we had, basically pound weakness for the week, and the euro was strong. Now it's kind of turn and flip the other direction. But literally, in the last 24 hours, not as much movement, and I'm actually not surprised. All eyes are on the FOMC statement today. It's probably going to be a big mover. I would say it. I feel like it is. I don't expect the rate to drop, but like I said yesterday, I think any mentioning of, how long the recovery is going to take, or how deep the recession is going to be, or how willing they are to stabilize the market, what they're going to do for big business, all that kind of stuff is going to, it's going to, jack around things. So the fact that most of this is flat minus the pound, and again, that is a pound story, right? It's a pound story because pound dollar up 88, euro pound down 56. Again, another nice day down, and then pound yen up 71. So, I mean, neither of those hit their daily ATRs, but again, it's showing you that it's consistent pound strength across the board. Also looking in the scanner, whoops, I forgot to hit the scan button. There we go. You can see it's pretty much, again, solid blue, again, solid strength inside of the pound, but also the Aussie. The Aussie's got some strength over there as well. And then again, euro weakness and more or less, I mean, I guess it's kind of mixed, but again, a little bit of dollar weakness waiting for today. So, 7, minus 14, 3, even minus 26 and 28, not really the biggest mover. So basically it's the pound, right? The pound and a bit of the Aussie right now. All right. So news releases today at 10 o'clock this morning. Again, nice reversal time. We have this pending home sales number. It's supposed to be much, much less than it was previously. It's interesting. I actually heard them talking about home builders and some of the data yesterday. And they said it was good, but they kept kind of saying, yeah, it was good for these guys, but it's not good for everybody. So, it was kind of interesting. I don't know if they were foreshadowing what they expect the number today to look like, but it was just kind of interesting how they're talking about, well, these guys had good, but these guys, not so much. And so it was interesting how they were kind of talking about it. So, yeah, kind of curious to see how the pending home sales. Like I said, it's not, on a day with crude oil and FOMC, pending home sales is not going to be the biggest mover. But I will say, it could definitely, it could control some of the early morning, media news today until we get up to the 2 o'clock FOMC when everybody, digests, what the statement is going to be. But crude oil, again, forecast is 1. It was 4.9 before, we'll see. Again, I think that could be a pretty nice mover. Oil was, I saw that it came down again yesterday for parts of the day. I actually haven't checked yet this morning, so that'll be the first time I look at it. But Yeah, it's still it really likes 41. 41 is like a magical number for crude. Um, and actually today I got to dive in. Actually today will be a crude. Actually it won't be today. It'll be tomorrow. It'll be a full action packed day of analyzing oil charts for that presentation that I have coming up. So we'll see. So FOMC, that's obviously going to be the big player of the day today. It can go a lot of different ways. So FOMC is designed to basically make sure that the economy does not crash, but more so the overall stock market. I think it's going to be interesting. It's going to be interesting. So the question is, do they give us enough information to kind of jack the market back up again? Remember, their job is to, grow the market, stabilize the market. It's not their job to send stimulus out. It is their job to control the economy and how the economy moves. So question is, if they mention statements about how we're going to backstop companies, we will not let companies fail and things like that, there's absolutely no reason why the markets cannot go crazy and rally, right? No reason whatsoever. I've seen a couple of people talk about, FOMC shorts, and it's kind of like maybe $1 short, but I'd be very hesitant to be shorting the overall market before the FOMC statement, because they absolutely could say some things about backstocking companies and new loans that we've never seen before to make sure they never fail with 0% interest and everything else. And all these things say is, hey, that's going to help. That's going to help companies grow. And again, that will jack the stock market up. So we'll see. Like I said, I have not read the FOMC statement. I'm not privy to that information ahead of time, but it's just kind of one of the things that I'm, kind of keeping on my radar. All right. As far as, looking at, kind of the latest news and things like that, I think the biggest bit of news in here is kind of what China's doing. Their banks are urged to, switch off the SWIFT system. And again, this is for cross-border transactions. It's the method, like, if you go overseas and use your credit card, they're using the SWIFT system most times to get a transfer back and forth. So that's kind of interesting. You're talking about, and again, the hottest news. It's, talking about the dollars not collapsing and, price indexes. So, yeah. Not much. Like I said, everybody's like waiting, right? Like all these things. It's like, oh, it could open the door for the yield curve. This could be good. Money and credit. It's mildly weaker. For a sell-off. Will it continue? And you guys know my feeling on it. Typically, when you see moves before the news, it could also be, positioning of the large money out there that could possibly have seen the statements. Because remember, if you want to short something, you want to drive the price up before you sell it, right? And vice versa. If you want to buy something, you want to drive the price down before you start buying it, right? You want to make it cheap. You want to make it on sale. So a lot of times that pre-market move is, what we want to watch out for, right? And it's not an easy move with something like that. As of last night, again, remember that CPI and the trim CPI, you guys can see it was slightly down. And then again, it was supposed to be positive and was coming in negative. And we mentioned this. I mean, again, not a huge miss on this one. But again, negative. Again, the trim definitely missed, and that's what led us to a small pop. But for the most part, not as much movement. Okay. Going into tomorrow, obviously the Fed statement is what matters the most. But tomorrow morning, early morning, we have some European news that is pretty important. Okay. This German preliminary GDP number. Again, this is a horrible figure for Germany as far as the euro as well. It's also probably why we've seen European weakness this week. Even last week. I mean, Germany is really, truly the driving force for the European economy. They are the industrial powerhouse. It's an amazing that, a country that has been basically melted burned to the ground twice is still the industrial powerhouse. And it is. I mean, it drives. I mean, if Germany decided they were leaving the euro smoked. It's done. It's out. It's game over, man. They're going to the next thing. So again, -9 for that forecast. It's kind of like, oof, that hurts. So there will be some obviously European, news or European movement tomorrow after that news release at 4 a.m. Eastern. And then we go into 8:30 again. We will be in chart school, but again, that advanced GDP number being -34.5%. It's like, my God, that is huge. Yeah, I mean, it may not really mean a whole lot because then, the next quarter, if it's up 40%, it kind of erases those things. But it's like, holy crap, I mean, talk about the media talking about how the, people don't fully understand it. It's like, oh, GDP's down 34%. It's like, ouch. And then his unemployment claims. So that'll all be tomorrow morning. Again, we will be in chart school back by that time. But in the overnight, again, the Swiss I'm not too worried about, but I think the German figure is definitely putting the euro and the euro pound currency pairs on notice as far as what could happen. Looking across, let's look over the scanner. So Scanner is mixed. Obviously, right now, obviously the pound is just on fire. It has been for the last couple of days. Aussie is doing quite well as as well. That again is gold. It's not so much the Aussie. I wouldn't say that there's any Aussie politics over here that I'm like, yay, this is great, woo, Aussie. I mean, again, even the news last night again was bad for the Aussie. But again, a lot of this is a gold play, assuming that they're going to talk about additional measures to stabilize the economy and those kinds of things. So, as far as the majors go, again, we had this dollar yen up, but I mean, dollar yen is up. I mean, it's moved 13 pips, so it's really kind of hard to say that this one is blasting. Breaking, anchor breaking to the top side. It's moved 13 pips in 24 hours, so not really tons there. And again, that's on the 4 hour versus a daily reading there. Pound dollar, Aussie dollar. Again, we've seen strength in both those pairs. So not surprising that those are up. They are pulling back right now because they are in an uptrend setup over the last 4 hours. A lot of that, though, will be positioning for the market open today. Dollar CAD and dollar SWIFT, both downturn setups, but no movement, right? -2, -30. It's kind of like, not too much. And dollar CAD was in a weird place. Dollar CAD was down in a demand area anyway. So, got to watch that one for that one. Euro dollar, it's moved 8 pips in 24 hours. It's showing weakness, and I think most of the weakness on that one will actually be tomorrow. But we're going to check that one out. And then again, New Zealand dollar is going to get drug in. I'm actually surprised that New Zealand dollar is showing that kind of sideways with a bearish bias. Again, they're kind of feeling the Australian news data more than Australia is feeling the Australian news data, which again, they will follow typically. Yeah, I mean, that's not uncommon, but they are actually feeling it more than the Aussie. But the Aussie is more linked with gold. The New Zealand, not so much. I mean, maybe land prices, I don't know. But they don't have the same kind of Chinese Australian gold inflation effect as Australia does. And then euro, obviously mixed bag, but it's just not moving. There's just no strength, no power. That will change tomorrow. So this will be a big one tomorrow morning for us to look at after we get that German data coming in. All right. Do you have a pair? No, actually, I have 2 Conyers. They sit kind of behind me to the side. This microphone, the one that I'm using right now, kind of pulls them up. The other one was worse, but yeah, they really enjoy charts, so it's kind of funny. They like would rather be out hopping around on the desk. They get really excited whenever I do chart schools. It's funny. They don't make any noise all day long, except when I'm doing this and I'm showing charts and things are moving around and blinking. They always want to contribute. It's funny. Like the one that's making the most noise, sir, is they're coming to go. Yeah, they could be. I don't know if they're licensed, but. Yeah, there are certain charts that they like. One of them will literally sit on the mouse and watch the charts. I don't know if it's like, I don't know if you guys can see it. Like, look on Twitch, you guys see like the background moves. I think they follow the like whatever they are in the background. Like, I don't know, it almost looks like ashes going up. But I think one of them likes to follow those. So it's like conure crack, right? Conure crack. That's what we'll call it. But they'll make all this noise now. They won't make any other peeps the rest of the day. It's so funny. But yeah, there's two little birds. I mean, they're tiny. If it was a parrot, I would definitely teach it like buy, or sell, sell, sell. I would teach it the Jim Cramer. I absolutely would. But no, these guys don't talk. They just make a lot of noise. All right, so let's go over and let's jump into charts now. Let's pop over. So first things first, let's talk about what we had last night. We talked about 71. 71 was an area we were looking to sell. We were hoping that price would get up there for news last night. Well, let's see. Did it get up there for news? Here's where we are right now at 8:30, and look at this. It hit its peak right when it was supposed to hit. So again, that's what we were talking about last night, being up in this area. As you can see, just before news, pop. We wanted news to pop up into this zone, right? And that's exactly what it did. It drove straight up. It went into that zone based off of news, and then what did it do? It turned and flipped and dropped about 21 to the downside. So the 2-hour binaries for Aussie dollar are 4-hour strike differentials. So again, we moved 5 strike prices to the downside. Hopefully you guys would take advantage of it. It was definitely a play that you were able to make money off of. And that was what my challenge was for everybody in the Nadex presentation last night. All right. So since that time, we pushed down. We hit a zone where we should have. I'll delete this just to make it a little bit cleaner to look at now. As you can see, we still have this zone up top. It's a zone that we've kind of marked off. Whoops, not that one. That one. We'll go back up to an hourly. And you can see this was a zone that we've been talking about. That should be off. Right up top. So prices kind of pushed a little bit higher. Not necessarily surprised. Again, I do expect there to be some talk today, and I do expect this one to rise higher. Now, this zone has been hit many times at this point. This was not the original. It wasn't drawn off of this one. But we got to touch here. We got to touch here. We got to touch here again. So this is really up in that 4 realm. I don't expect it really to hold much longer. And in fact, where we are now, we're actually pulling back to a zone. It's not It's not the most ideal zone, but again, there is a zone sitting right here with some buyers, and with the U.S. market coming online, I wouldn't be surprised if we have a bit of a bounce higher, but I don't expect this zone to hold much longer at this point. Again, this is one we drew from a while back. Next zone I'm looking for holds or sells to come in is at 72.47. This zone has just gotten touch, 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 touch. There's just not enough orders left in there. I don't think it's going to hold. Um, it could potentially, again, pending home sales may give it a little bit of a move, but like I said, I think they're going to talk about ways to stimulate the economy and more stimulus today, particularly for companies and kind of 0% of loans, and I just don't see. I just don't see them worried too much about inflation at this point. I think they're going to be worried about a major crash in the economy, and they're going to try to prevent that more than anything else. Like I said, if you could avoid the 2008 crash, if they could have seen it coming early, I think they would have done everything in their power to stop it. I think that's kind of what we're looking at right now. But you guys can see multiple hits in one. This is actually 1, 2, and this is kind of where they're 3 or 3 here. So I think the zone is gone. I think 72.47 on any type of spike today is what we're looking for. It's about a 70 pip spike up. FOMC could absolutely move it. I would actually be happy if this zone kind of fails here and does come a little bit lower. I mean, there is one zone here, and then there's another small one down here as well. So there are areas for price to pull back to. I don't know that we can go this far up. Before FOMC, it would be nice if we kind of come a bit lower and then spike straight up into this. I think we can get a big emotional reaction and kind of a turnaround. But downside. I don't know how far are we from that one? About 90. Yeah, I mean, I think for me today, I don't think we'll see if I got a reversal at 10. I'll check the charts at 10 o'clock and see where price is. There may be something small. I'm going to make sure that I'm flat by like 12, 1 o'clock though. I don't want to flirt with that, the pre-market after lunch kind of Wall Street news. I want to make sure that I'm completely flat for FOMC and then probably play the second. But 72.47 and 70.83 are probably the two zones that I'd be looking to take kind of a parabolic spike off of. If it spikes up or down into either of those two, be looking for some type of reversal and a confirmation pattern. Okay. Looking at Aussie yen. Okay. Well, here's the Aussie yen move. Here's where the news kicked in. Price started to rally. News came out. We expected it to be negative, and boom, straight back down again. So kind of the same thing. 4 strike prices to the downside. Because there's only extra 4. Kind of the same idea, right? Went to exactly where it was supposed to on a short, small, nothing crazy, but it wasn't earth-shattering base news. We knew it was going to be negative. We saw price pre-rally up into a zone because again, if you want to short it because it's negative, you raise the price, right? You want to sell it for as much as you possibly can. And that's what they did. They came back to a zone that we'd seen it, hit it, boom, right back down to the origin of the other move. We're in the same area. All right, so for today, you can see this zone is held. Again, it was a very, very minor zone. It's nothing earth-shattering, nothing crazy. But again, it was a 30-minute zone here. This one will move today as well because it is yen-based. We can remove a lot of these from Sunday now. We don't really need them. Let's see. So for an FOMC spike, I don't know that. Let's see. We are about 11 pips away. So 75.40. Or 75.50 right here. This could definitely be an intraday short. If this thing rallies, again, when I say rally, it's only about 11 pips. It's not too much. If this is pushing up, right, and we get that, the pending home sales number, that could actually cause a slight kind of intraday move to the downside. It's not a very big one, right? This is, rather small. I mean, this is, nothing crazy here. But it would look something like that for a 10 o'clock reversal. Again, if it does not hit at 10, I probably wouldn't hold this much after that. I would not be entering after 11, 11:30. There just won't be enough time. Because obviously the yen is associated with the indices. Again, FOMC could jack this one all over the place. It's also associated with gold, so it's kind of a double whammy. If they mention crazy inflation, that could really hurt us over here. If they mention stabilizing companies and not letting companies fail and loans for all companies, etc., again, that could affect the yen on this side. So it's kind of like playing with fire and gasoline at the same time. You're juggling a water balloon of gasoline and you're standing in a fire pit. Is kind of what this, the risk level that's associated with the Aussie yen today. So again, take small positions. Unfortunately, this one doesn't have as many. I like the Aussie dollar is better for playing spikes. We will probably have something down here, down in this 47 level. Definitely would not be taking this one. This is more set up for a short at this point. But really, I mean, besides the 75.50, there's a zone up top here. And again, 4-hour level. Oops, not that one. This one right here. There's a zone sitting there, but we're sitting, and it's about 50. So I mean, it could get up there. But again, ideally, I mean, in an ideal world, we want to hold shorts until we get back up into this range. There's minor shorts here, but something like OFMC, we want to hold. You want to hold till up top here. And really, bottom side, it's about 100 down. Probably in here. Probably somewhere in the middle here. Let me see, actually. Let me drop to one hourly. Like I said, these two, the 47.92 and 74, they're based off of, hourly and 30-minute levels. FOMC is typically not how you want to trade those. Probably here downside, 74.13-ish. So ideally, we want top or bottom. We want extremes on this one. Again, intraday, you can take this 75.50. Euro yen. So euro yen will have some exposure. You can see this one really hasn't moved too much. Again, mostly sideways. Here's where we are right now, and here's where we were yesterday, right here. Okay, so we're in the same exact spot. We did come down. We did bounce off the top of this level. I was looking for more of a cleaner entry at 122.89. It ended up just touching right here. And again, I mentioned it could, but really, I mean, we're talking about, 15 pips movement. If you caught this at the very, very top to where we are back again, or even the high, you're talking about 15, 20 pips, just not worth the level of risk that was in that. Again, sideways movement. This one will be a big mover tomorrow. I do like the 122.89 from based off of this level here. It was tested once and twice. It's number 3, but again, it's had great reactions both time. If we can coincide that with the European Open, I like it for a long. As far as on the top side, again, I would be using the same level again. We had a nice push. We haven't made it back up there. So 124.12 on the top, 122.89 on the bottom is kind of where I'm bracketing in the euro yen. Pound yen. So pound yen has been able to rally back up again. This is the 4-hour. We mentioned that 136.43 would be an area we're looking for. As you can see, it did pull back down to that same kind of area of interest that we had marked off yesterday and rally back up. So I do really like where it is. You guys can see that it came up and literally just grazed off the bottom of this, right where the 136.47 is, almost to the T. And again, touch, barely touched it as well. So that's kind of that same level. Where we were yesterday as well, guys, just so we can stay consistent with this. Here's where we are now, and then obviously for the Nadex presentation, we were at the 12 right here, right here. And what do we talk about? This yellow area was an area that we needed to keep focused on. Again, it's been sucking things in. Well, what did it do? It pulled here. Actually, let me pull this back so you can see it a bit better. What did it do? It pulled back into the area. It bounced again. It stabilized in here. And then this morning, and then rallied back off of again. So again, same area. It was an area of buyers, supported, crashed. Then it was an area of sellers, supported, came through this kind of candle, kind of got weird, stabilized again, boom, sellers in, hit it and dropped. Went over, was buyers again, came back, stabilized again. So in any of your shorts, we got to make sure that we are out by that area, right? We got to make sure that we are out by 35.80 because again, that has been an area where price has, or there have been buyers or sellers stabilizing all the way across. So, right now, I'd say I'm more short this position. Again, it's been a big rally up, and we talked about it yesterday too. That kind of a big rally up, you're always looking for some type of reversal. This one gave us some room, but not tons, and you can see it did exactly what we talked about. Popped right off of it, stabilized, and then that formed the bottom. Now, next time it hits, I do think it will go lower. It did grind a bunch of these orders through before finally kind of turning slowly and going up, and then kind of gaining traction. Again, that would be people playing this out of the top side, that momentum. Look for it to kind of reverse today, pop back down. I think 135.80 needs to be a target. And then at that point, again, we may be set up for another, momentum breakout to the downside. Kind of the same similar setup we had over here. 135, a break of 135.71, a base below it, and then a retest back up again. Similar to this is what we'd be looking for with targets down at 135.41 and 135.21. All right. Going across to the pound dollar. So pound dollar, we talked about this upper level yesterday. And again, this was based off of a 4-hour zone. And you can see we hit it, we pulled down, and we stabilized below level. And that's a big kind of, this is going to go higher, right? That's stabilization. So now with this one, and again, we really don't have clean levels till up here. This is about 129 pips away, okay? FOMC does have the potential to knock this thing 125 pips. Okay. Again, it can be, interest rates, things like that. Strong FOMC moves can be anywhere from 130 to 150 pips. All right. Um, right now, if anything, I'd be using this level for kind of a continuation. I think we will have a continued punch through. And again, this would be kind of one of those Harry Potters over the next few hours. A punch up, a retrace down, and then a rally back up again. Okay. And again, a rally back up into that kind of 4 hour zone up here. All right. This is kind of how I see today going. I do think we will have, again, I do think the note today will definitely be dollar weakness. It's just getting a good, a good entry into it. I would really like it to punch through first. Hopefully we can do that from like kind of the market open until that 10 o'clock time. It'd be nice if pending home sales was better than expected, which pulled it back down again, and then getting here for kind of a long. I will warn you guys, as much as I'd love to say, hey, listen, this is a great Nadex trade, take it. There will probably be so much premium jacked into this thing today that it may not even be viable. It may have to be something that you guys take earlier, and just trying to play that volatility. Now, what will make this one harder, Nadex in particular, is and again, it may be a knockout because they have the least kind of premium jacked into them. What will make this harder is the differential between the bid ask is going to be big, right? The market makers know there's a lot of volatility jacked into this one. They know there's a lot of risk. They're going to make it big. But then there's going to be a volatility crush after the fact. So even though it's going to look great, it's like, oh, we need to move this far. Yeah, the price is going to get funky. They're going to be, wide, and then it's going to crush afterwards. So it's kind of like, how do we keep it in the right area? So it's going to be tricky. It's going to be tricky. And like I said, I think knockouts will probably be the best. I'm afraid that binaries will just be a bit too nuts. Problem is if we have any type of whipsaw back and forth again. I'm basically hoping that we can kind of like thread the needle with a knockout. Hopefully they don't do the stop printing. You guys remember that a month or two ago, for like the big Brexit news? They stopped, the knockout broke and they did not print the new ones. There was a delay. I'm hoping that's what I'm hoping that doesn't happen today, but I'm afraid it could. And if it does, I'm going to send, angry hate emails, because that's bull. It's the best thing that they have and you're not going to do it. So I think that's what, this is a potential that we can look for today. If it turns and rolls over, I would be pretty surprised today. I mean, it is sitting up in a zone. We are very, very high in the curve, on a daily. We need a bit higher to go before we hit this level. And again, that level, this is old stuff. That level's kicking in right around 130.91, just so you guys can see it. But we got a bit of room. We got some room to run. Like I said, we got about 110 pips before we can get up to that level. So we got some stuff to do before that time. Any type of short off of this one, any type of dollar weakness play, I'd be pretty surprised. If the Fed today mentions, raising interest rates soon to curb inflation, that would be pretty interesting. That would be pretty interesting. Raising interest rates would put a pretty big hurt on gold, but it may happen. I don't know. It depends on what the inflation readings they have are. Euro pound. So as you guys can see, Euro pound is coming all the way back down again. We mentioned two kind of little hiccups in here, and again, we got them. Hiccup here. We mentioned kind of, we're in a hiccup area right now, but I do think 90.11 is a target to the downside. I do feel it'll get down there. This is kind of a short for me. I'm looking for an additional entry in, waiting for kind of a successful pullback here. There's been a couple places, but not really great ones. I do think the news tomorrow will be negative, and I do think the market will not appreciate Germany having, the issues that it does. So, right here is where we are right now. So again, 90.41, any type of good entry in for a short to the downside, I think 90.11 is a nice little target. And again, as of 11 o'clock on, I do think, this could give us, provide some interesting shorts. FOMC really won't affect this one too much, or shouldn't. But 8:30 is where we are right now. Let's see, this is 30 minutes. So we were right about here yesterday, and we talked about it. It came down, it kind of rallied and then just dropped again. And again, pound strength. Pound strength is what this play is. Okay. As far as any imminent setups on this one, like I said, I don't see it right now. We need a clean area. I'd say maybe this. Again, this is done on a 30-minute, so it's a lower time frame level. Something along those lines. And the risk is pretty tiny. It's only like 6. So, easy way to play that one if we can get a little rally back up again. But I do think targets down in 90.11 will be good. Euro dollar. So euro dollar, as you can see, is just going crazy. Daily up here, this is what we marked off yesterday, that we were hitting a daily zone. You can see it did pull back from the daily zone and made another attempt. Now, interesting enough, this is kind of a failure to go higher situation. It's not the ideal candles. I prefer the candle setup in a little bit different of a way, but it is kind of boxed in, just so you guys kind of can get a reading on it. There's an area where we've had it pull back to. So it pulled back to the right area. It did push, but it has put a lower high in. So very similar. I just don't feel that the FOMC is going to give anything that brings in dollar strength. It is high, and the only thing that's a saving grace on this one is it is a daily zone here. So the question is, are technicals going to be able to outdo the fundamentals? Maybe. Again, we've already shown that sellers have kicked into there. I don't know if you guys can see it. Let's see if I can zoom in a bit more. I wanted to make this bigger, but I can't. I can't zoom in anymore either. Let me see if can I cheat this. No, it's not going to let me cheat it. Anyway, here's the high. Here's the first wick. There's the second wick. There's the third wick. So they are descending. So it is technically putting in a nice little level, at least on the daily. Again, larger time frame. I really don't like, the 4 hours much. It is a level, but again, I would have to say, at this point, we are kind of boxed in, one potential trade setup. And again, I say potential, timing is going to make all the difference in this one, would be a short back down to 16. And I love how, the 1 to 3 comes in right at that level. And I think we talked about, did we talk about this one yesterday? Yeah, we probably talked about this one yesterday as well. Having a break of that level, coming back down again, it's doing what it's supposed to do. I mean, again, new high, lower low. Here's your one low. It went off this level. If we punch in again and get deeper, again, when this breaks, the only kind of curveball in this again is going to be FOMC. Now the timing of it. This is a 4-hour chart, so it's going to have some problems. So we'll see. Keep those on your radar. One expectation of this too, like I said, I see it being more of a dollar weakness thing today. If this thing comes back down and we get a nice bounce to the top side, it doesn't mean that this trade is a bad trade. We just need to wait longer for it to come back to it. Like I said, we have FOMC today, but they have German GDP, which is supposed to be horrid tomorrow. So again, this may be an early morning trade for tomorrow. If we can punch below, pop back up, and then continue back down to 16. Okay, so it'll be interesting to see how this one plays out. But if we get a big spike up to 119.27, again, I am also looking to kind of take that, something along. Recapture that from FOMC. All right. Now, dollar CAD, we mentioned it yesterday. We're kind of in this area, right? This kind of no man's land. It's a huge zone. This zone was formed back in June, and again, you guys can see the absolutely just huge move off of it. It's a big zone. We've been chopping back and forth in kind of this lower section right here. Again, lows are getting higher, highs are getting higher. So again, consolidating in. This one will have some movement, but the only problem is when we talk about the U.S. collapsing and things, there is a spillover effect into Canada. With lower demand and a bad economy in the U.S., obviously we don't need as much Canadian oil, and that's their number one export to us is oil and lumber. We're not building homes, we don't need the lumber either. So yeah, it's kind of a funky position. I don't really like too much of the setup. Again, there is a zone here on the bottom that is, it's held. It's done. It's held once. I still like, I still think that this 134.35 is a level we need to watch out for. It is about 60 pips away. It's definitely something FOMC could bring us up into there. It's not a top of the, it's not a top of the chart curve, but it is something smaller. Ooh, excuse me. So yeah, like I said, I'm not as huge a fan of this one on for FOMC. Just feel like we're kind of boxed in. These are more intraday trade guys. These are not so much longer term kind of FOMC level news. All right. And remember, FOMC has the potential to be as large, if not larger, than like non-farm impact. Non-farm just happens, you get big non-farm moves more than you get FOMC, but FOMC has the power to be nuts. All right, so again, dollar CAD, I probably wouldn't trade for FOMC today. For oil, you can maybe trade something small, but nothing really stands out. 134.35 is probably the best intraday target. With everything going on, I probably won't be looking at this one to trade. Now, this guy over here, dollar yen. So dollar yen is basically flat. It's moved officially 9 pips in 24 hours. So we're sitting right here right now at 9 o'clock. Yesterday, we were sitting right here for the next presentation. So we are in exactly the same spot. All right, so 105.57, I don't think is going to be a good entry. It's been pushed to the brink here and here again twice. Again, it did establish a new zone in there. The indicator drew it in the same box that we drew, but because this is a 30-minute level, I feel like something as large as FOMC notes is going to be not the best entry. Now, the level above is about 90 pips away. If we get a 90 pip move in this one, there will be a retrace. It may take a little bit longer because, again, it's going to spill over into the indices. And again, the yen is a proxy, so it's not a direct correlation. It will be more of a battle because the dollar's involved as well. But I think 106.04 for me is an area that I've been watching for a while. And again, let me take this off so you can see it. I really like the formation of this level that it came up, it dropped at base, it dropped again, and then retested it and dropped lower. I really like how these candles formed this level and boxed it out. So for me, 106.04 is definitely an area for sellers. Unfortunately, downside, even on the daily, you can see we don't have much. We have kind of this gigantic wick that touches all the way down to 103.34. If we drop, 200 pips today in this one, it's going to be like, holy crap, that's a huge, huge move. But unfortunately, that's really the first place we have some clean levels. With this 103.34. The level actually starts a bit higher, but it's definitely been wicked. And when we lower it to the hourly, we are able to further refine this one. So, yeah, I mean, this one, if this spikes all the way down, you're literally trying to, catch the bottom, catch that falling knife. But, that's kind of what, for me, this is kind of what it would look like, in some type of retracement move, this one coming over. All right. Now, if you don't get the big move down, no harm, no foul. Keep it on your radar. It's something we'll keep, we can look at, later on down the road. Again, higher time frame zone. Nothing on this one lower is like, I'm like, oh, but 106.04 is, again, this level here is kind of what I'm looking for. All right. Going across dollar Swiss. So dollar Swiss, again, we pulled up into a zone right now. You guys can see, here's where we are right now at 8. And we were sitting right here yesterday. And what did I mention? I mentioned that we had this kind of zone right here. Very clean, right? Drop, sideways, and drop. If we hit it again, we get a little bit of a retest. Right about here, it already pulled away a little bit, as you can see. Here would have been your trade setup on that one. Right there. It's not going to let me do it. Come on. There to there. Oh my God. The snap feature is great, except when it doesn't snap to where you want it to snap. There we go. So you guys can see it came all the way down to 1 to 3. So we're back up in that level right now. Like I said, it's a zone. This would be touch number 3. U.S. market coming online in 30 minutes. I don't know if this one will have enough time to run all the way back to its full profit target. This would be a Swiss strength, dollar weakness type move. I am afraid that we will see more dollar strength this morning as people are, preparing for a weak dollar, weak dollar news. So I don't feel like this one has as much a chance to hold as it did yesterday. I liked it yesterday, but again, FOMC is going to suck this thing, suck the markets dry. We're going to see smaller, amounts of movement. So, I mean, if you wanted something small this morning, guys, yeah, you could probably take this short. But I just feel that it's going against the grain right now. I feel like we will see dollar strength until FOMC and then a collapse. As far as taking this one short in any place, I think this one is going to be more sensitive to what, again, China banks want SWIFT out, preparing for repercussions. I think if we hear about any type of sanctions from the U.S., I think that's going to be more of a mover on this one than kind of just the standard FOMC. But we will get some FOMC move. Again, the dollar's there. Clean levels up top would be this 92.52. Not the cleanest. Obviously, the cleaner one would be the zone up here at 92.99 or basically 93. We're sitting about 108 pips on that one. If we move 108 pips and we're able to tag that level with FOMC, this will be a nice reversal. Once we finally get the confirmation that it's run out of steam, I'll be all over this one. I would definitely be over that short because anything they bring in today that gives us, again, this is a dollar strength story. If we pull dollar strength out of this, I can't wait to short it. Because again, any news of China and sanctions, and they're waiting for sanctions, that's going to give the Swiss strength, and that will definitely keep this one driving to the downside. Unfortunately, I mean, look, guys, on a daily level, we really don't have much. I mean, here's a weekly level, right? There is nothing showing up, and even on a monthly level. Monthly level, you can see we're kind of jacked into this range, but, on a weekly, we got nothing that's super clean down here. So this is one of those ones. It's you're trying to push it down to the bottom, and I would say it's a better trade to get short in than it is long. So, but unfortunately, the best setups we have are a little bit higher. We need a little bit of a bounce. We need a little bit of help. All right. But again, if you guys grabbed this one from yesterday's NITX presentation, good job. All right, NQ. So here's that level I marked, and I said, hey, listen, this is an area that, we've seen it over here. We've seen basing here. We've seen it react low, high, low, and then boom, it went low again. Look at this. It bounced and went higher, bounced and came up again, bounced, and we're in that area again. So interesting level with the NQ. It really, really likes this. And this is kind of the same thing that we saw in oil, that there's that one zone that price keeps wanting to get sucked into. So where can we take this one? All right. I still think we need to keep this 10306 on our radar. I do like it more for a short than a long, right? It's been pushed to the brink. It was an old area. It's been touched multiple times. We haven't been able to drive down to it. So, it's quite a bit of a movement to the downside. We're only on an hourly. So this is just kind of like I wouldn't say any of these levels are really that great, right? Small level here, a little basing here. I don't like that one. This one touched, then it broke through 4 times, and you can see, if I extended this across, you can see exactly what it hit again, right? Exactly what it hit again. If I continue this, right? If we move this all the way over, there you go. So I don't know that this would be the level to trade off of. It's such a small level, particularly on an hourly. As far as where we'd want price, I feel like if we can get up into this range, this 107.04, under normal situations, I think that would be a great level to short from. I just feel like right now, with everything we've seen, I think the FOMC is going to want to figure out how to stabilize this market, not necessarily take a short. But if I was to take a short off of this one, I think that would be a pretty good area. If price does go down again during the day and FOMC helps drive that lower, as I said, I do like entries below 10.306 going down to 10.151. I think that's a good level. We had a nice base. There was a nice pop. I think that's an area that we need to respect. And again, will that be the bottom? No. But will it? Could we get a potential bounce like this or like this off of it? I do think that's 101.51 is where we want to watch out for that one. But I'll tell you right now, I'm not going to be surprised whatsoever if this market rallies up today. I do feel that FOMC is going to start to be sensitive. Again, they don't want the market to collapse in half. It's their job to stabilize it. I think we are definitely in for a down draw, but they're going to try to figure out, I think, how to buffer this one. And, destroying the dollar and not seeing inflation is fine if it stabilizes the economy. Again, all those things are positive for, the indices. Okay. So, kind of I'm looking for, like I said, if we rally up to here, I'd be willing to take something, maybe to the short side. Again, if it continues to push down, there's probably going to be a pop after FOMC. I think clean wise, removing any type of opinions, again, on a technical level, a break below 10.306 gives us a target of 151. S&P. So S&P, here's where we were for the NATIX presentation. We marked off, I think that one. Let's see. That was from yesterday. So here's where we were yesterday. As again, we had a level of base and we drew it. You guys can see that it gave us a nice entry, hit not only the 1 to 3, but also came down and hit your 1 to 5 before it glanced off of it. This one's kind of the same thing. Like I said, there was that small intraday level. We had basing in there. The indicator had marked it off. We used the basing level. Is it the strongest? No, I don't think it'll hold again. I would not take it most likely today. If we get a rally up, before 10 o'clock, yeah, maybe you could take a reversal off it for 10. I think the level up here, this white level, kind of where this other box is, over in this, 3250 range would be a better 10 o'clock reversal. Like if it gets to be positive here and then we hit 10, we could have a reversal off of it. But kind of similar, I'm looking for 3187 as a break with a target down here at, probably 3155-ish. It would be my target for this short, but again, if it comes down to 31.43, not going to be surprised as either. Kind of the same thing. I do feel that the FOMC is going to be more interested in stabilizing this market and figuring out how to keep it from crashing through the floor. Again, we've seen new highs put in, but 32.51 would be one area, and another one for me up top if we get a burst forward. Could be at the 32.86. It depends what the candle looks like. If it's a gigantic, big spike like this, I'll be looking for a reversal. But, if we breach those two zones, I'm going to be looking for a failure to go higher top on it. Any type of basing, a red, green, red. I do think there will be a short off of that because, like I said, they can say they're going to stabilize it. It will give us an immediate pop if they say they are going to do that. But eventually, again, these things are going to turn. The closer we get to elections, they're also going to start retracing back to the downside. Um, God help us when November the election comes, because this is going to tank. Yeah, it's been long overdue. So that's what I'm looking for S&P. That's the Dow. Let's go back down to the hourly. Same scenario. We had that one trade here. Again, this was super early morning. Again, all the profit targets on this one were hit, right? I think this, 26,664 is probably worth one more. So, I mean, here's where we are now. We were sitting, let's see, 7,653. We're sitting right in this range. So, never ended up getting that reentry back in. Let's see, will we take it again? I don't know. At this point, it's kind of the same thing. I mean, it's a nice push forward, but it's only based off an hourly level. Like I said, if they bring in talks about stabilization and protecting companies and all that, I just don't feel that we're going to be able to hold that level again. I do think 27,105 is probably a better area to get short on this one. Kind of coming in here. I mean, again, we've touched it. This will be hit number 3. But any type of really gigantic kind of push forward, I think. The first area we're going to look for a reversal pattern would be 27,105. Second would be 27,501. Downsides, we will see some people step in here at around 26,059. But I think, again, we're kind of in the middle. I like this, this 25,550, 25,525-ish, 25,556 area. This level here, I think, is a good level that we need to watch out for. So I think, any type of spike down, again, there's definitely there's a nice opportunity for a short in this area here. Again, this is more or less a racetrack, very little pick back up at all. So again, we could have a potential bounce here. If we have a break, look for a break below, a retest, and then again, a short with a profit target down at 25,526. My personal preference on this one, if I got to say what was going to happen, I would really like this to pop all the way back up, blow through this zone, go up to 25 or 27,501, put us at all-time highs tomorrow, and then the reality to set in, and then again we can start, another short, big collapse, something along these lines. I'd be okay with that. I would like that if I had my way. I don't know if I'll get it though. We'll see. I think it'll be a little bit more, a little bit shorter term. But yeah, this level, I don't know if I'd use that for FOMC, guys. I think that one's going to be a little crazy. On Ford Bronco, I'll do Ford. Let me do 2 other charts, money, and then I'll go look at Ford. I don't know. Ford Bronco, I kind of have mixed reviews on that one, right? Because when they mentioned the Thunderbird, everyone was like, "Yeah, the Thunderbird's coming out," and it was horrible. Now the Bronco they've been talking about for years, but I don't know. We'll see. But yeah, I'll cover Ford in one sec. Let me go over to gold because gold's going to matter. So here's gold. Why is gold going sideways? Everybody knows FOMC is coming. It's just the calm before the storm. Gold is absolutely, without a doubt, going to jump and go crazy. This one will be, like I said, we've had this level here for normal trading at 1973. I'm pretty sure that this is going to get blown through today. If they mention anything about stabilizing companies, giving 0% interest loans, not even, maybe not raising interest rates till 2022, because that's a statement they could make today, meaning that we would be in low interest rates for an entire another year. Yeah, this sucker's popping. Good luck with that level. I just don't see it holding. If they mention anything with interest rates, though, with potentially, looking at it again, or, being very hawkish about, inflation and keeping a cap on inflation, I do think that is a situation where we will see gold pop down. But here's kind of the balance, right, guys? Everything's a scale. If they mention about keeping a very close watch on inflation and controlling inflation, the way you can control inflation is with interest rates, which hurts gold, right? That would cause a pop down into the 1906 level. But what's going to happen, I'll tell you right now, if they talk about doing that and raising inflation, that will hurt the overall stock market, okay? Then what's going to happen is you're going to have the Republicans and Democrats bring their stimulus bill up. Again, it's going to be approved fully, and again, we'll find full details. You're going to find that out in the next 2 days. So what are you going to see? You're going to see them say, this is how much money we're printing and we're sending out to people, right? We are going to give you a $1,200 check and we're going to do that. I mean, we don't know what it is yet, right? We'll get the final deal. And maybe it came out this morning. I don't see it. I'm pretty sure it would be all over the place. But, what the stimulus is, that's what could happen. FOMC could drive this down because we're going to watch inflation and curb it. And then the stimulus comes out and goes poof, and pops right through the top. So gold will be pretty precarious. If you guys know how to play some of the breakout moves, that's probably how I'd play this one. Gold may actually be the better way than currencies to play the FOMC statement, depending on how much premium is jacked in a Nadex. Again, there are knockouts for gold. So again, if it can be timed correctly, could be an interesting knockout, whether the top or the bottom, depending on where we are positioned. But that 1973, unless they mention curbing inflation, I don't know that level is going to hold as far as FOMC quality levels. But again, if it was intraday, any other day, guys, I love the way that top formed. So I mean, for me, I'm still watching 1973 and 1906. Silver. All right, so silver. Again, we more or less just moved sideways. We're sitting here right now at 8:30. Yesterday, we were sitting right here, right here. So again, we hit this level, and I mentioned it. If we can get a break of this level, it can move somewhere. We drew a top pattern here, right? And all it did was consolidate. It triggered, went all the way up, ended up going right to kind of where you would expect that the price to be held by. But as you can see, this one consolidated back in. So silver is kind of between the kind of a rock and a hard place level, right? That previously that violated zone was what held and gave us the entry. And again, we had drawn that entry, and again, your profit target could not have been on the other side of the zone, and it held. So I think silver at this point is showing us that it really doesn't know what's happening. If I had to draw, you guys could draw kind of, there's your consolidation from one side, and you can kind of draw there's your consolidation for the other side. So it's going to move also, but nobody has any idea which direction it's going to move in. If we didn't have FOMC today, I would look at this and say, listen, I am probably more bearish, in my look. Reason why is, again, the highs are not getting better. Again, we're not forming new highs. The lows, it's hitting an area that we've seen kind of, buyers step in, but we've also seen sellers step in. And once it drops below this level, again, this comes from an area of sellers, and there's not as much to the downside versus the levels on the top. So, I would say I would be more bearish this position, but again, FOMC, it'll get drug up. The other reason why is everybody's talking about silver. Oh my God, silver. When everybody talks about silver, it tends to not do as well. But I do think any spike with FOMC at 25.98 or 21.55, I think would be buying and selling areas in silver as well. All right, let me go across the oil, and then I will go over so we could have a market rally in the first 30 minutes of the day on this. Yeah, we absolutely could. Yeah. I mean, think about it, YOLO. If you want to sell something, do you want to sell something that's on sale, or do you want to sell it when it's overpriced? So that's kind of what I feel is what you got to watch out for. But yeah, absolutely. We could definitely have great market sentiment in the beginning of the day, especially with pending home sales being negative. Yeah, absolutely. Yeah, it could all be good. Again, until it opens, you don't know. All right, so let me go across and pull oil real quick. Where are we at? This is FX Street. No, I went the trading view one. Where is it? Oil. All right. So here's oil. Here's where we are right now. And if we go back to yesterday, we were sitting right here. So we're in the exact same spot. What did this level do again? It did the exact same thing. It broke a little bit lower. It came back up and sucked into the level, went lower again, went above, and then sucked back in. I'm telling you, 41.15 is like the man. It's like the magnet for oil. It's stuck. And I said, hey, listen, if we can get down here, good. If we can get up here, good. It's sitting right in the middle. It's trying to ruin my day with oil. If we can get a collapse in oil this morning, again, if we can get down into this green kind of line right here, 41 or 40.60, I would be interested in taking this one long. Right now, it's kind of a no man's land. It doesn't really understand. It doesn't know what it wants to do besides 41.15-ish area. I was literally hoping this would be cleaner. I was hoping we push up or push down in either of those two levels, and we still can't reach it. So, we need a pretty big miss on this one, but I do think this lower level is good. I still think, again, we're in the same exact spot. I think that, again, we will continue to pop either way. If we can stabilize here and pop a little bit up, there may be a long today based off of what we see here. Again, it did punch through. It did push down. It's having some problems now. So again, if we start to pick up, and again, what I would do is drop this down to like a 15 or 30 minute. If we can get something that looks like we're getting a nice little bounce off of this, and again, this is a kind of a push up, and then now it's back in a downtrend to pull back to its level. If we can get any type of a confirmation up, again, we could have a move up to 42.20. But right now, it looks like all it wants to do is kind of sit in its, sit in this zone and just consolidate. So, yeah, I was hoping better movement in the overnight. We didn't get it. like I said, I think a lot of the eyes are on FOMC, and that's going to be the main driver for today. But again, who knows? We may get the open, and we may get a push down into 40.60, and that would give us a nice a long entry today. Or vice versa, we may get a pop up, maybe after the news. What one possible scenario is if this rallies up, before FOMC, they could mention something that talks about continued demand, and mentioning this, and they could say something that could also give us a stimulation move to the down or up. So we'll see. 9 o'clock's a little bit early. It's not where I want it to be. Again, I'm an if this then that trader. I don't have a crystal ball, so I want it to go higher or lower. All right, so with that said, let's see. Sergi Money, you wanted to see Ford. So let me go ahead and pull Ford. I haven't looked at this chart in forever. Let me pull Trading View real quick for you. Let's do Ford. Now, G, are you a Ford or are you a Chevy guy? Always got to ask. I love the acronyms on both sides. All right, Ford. Let's bring Ford in. All right. Let's see what we got here. This is the hour. Let's get a bigger kind of a macro view on this one. Let's see where Ford is. All right. So, let's see. If you're willing to answer that, let's see. I'm going to put, I do have a gap in here. So let me dial this down a little bit and see what we got going there. Let's go down to a 4-hour. This one's consolidated in. Let's see, what do we got over here gap wise? There's a gap just a bit higher where we are. Check it out on the hourly. Not as concerned about these. So let's see. I'm gonna mark this. Nope, not that one. I want horizontal line. We can do horizontal already. That's fine. All right, so let's put. You know what? I'll do another one of these here, and I'm going to change this to just a different color. All right. Shut this down. Let me get a little bit smaller of a view. Oh my God, did they really ask me to do like? I think that said crypto. Did you guys see that? I think they asked me to trade crypto. So I would say right now, I mean, looking at where price is right now versus kind of what it did right here, there's nothing really stopping this from getting up into at least. I mean, even here, these wicks are almost the same exact top. There's a little bit of right here. Let me see if I can see if I can get a better view at that level. No, it's just a little bit of a kickback. It's not that bad. So right now, there's not a whole lot in here. So that's why I kept going back to this area. So this was a big kind of extended range move. Having these both up top is typically a telltale sign. I mean, again, there was buyers there, but any orders they established here typically got cleared. So for me, again, this long extended candle, there's no feedback in there whatsoever. Price is at 710 right now. To me, it looks like it's good to the top side for at least 30 cents. Auto sales have been good. So this being beaten down here is kind of surprising. But Ford is one of those companies that if they do mention stabilizing companies and things like that, I think it helps benefit Ford. I would say that probably Ford is more of a stimulus type deal. Again, if people have disposable income, they tend to buy more cars. As far as the Bronco providing anything, I don't think there'll be people. I mean, yes, there will be people that be interested in buying it, but is it going to be their best-selling vehicle, for the next year? The answer is no. I don't see that being again, it is a very, nice looking car, has been a concept forever and ever and ever, but I don't know that it's going to be the next driving force that's going to take this back to $100 or anything like that. So I would say in the near term, I'm probably more bullish this position. I don't see a lot up top holding it back again. There's a bit of a gap here, and again, it has pushed higher, at least on the 30, on the 30-minute charts. So, I would say overall, I'd be, a bit bullish. I don't see too much. Like I said, I don't really like $7 stocks. When you get into that $7 to $5 range, they're not my favorite. they're not my favor. But I do believe that Ford is probably a company that's not bad to take. Um, During the whole like housing bubble, when the auto industry had all those problems, I was very much a Ford supporter. Not so much on the sense that like Ford didn't need the bailout. They were forced to kind of take pieces of it, but they didn't actually need it. Um, and I felt like because Chevy got the larger bulk of the buyout, they were able to get ahead of Ford. So as far as a stock, as far as a personal belief, I think Ford did it the right way. They didn't need the bailout. They had built the company right. They were meant for the kind of the for it crashing. Chevy did it all the wrong way, got rewarded for it. But I also feel because they did that, that Chevy tends to be the more, they're more properly situated than Ford is, for lack of a better word. But I think you're good. I mean, I think up until 70-50 or 750, I think you're good on this one. All right. Um, Absolutely profiting from stimulus. Yeah, it's a stimulus deal. Like I said, it's going to be depending on who gets more. Um, that's what's going to matter. But I think their earnings will be good. I think everything I've seen auto wise has been pretty good. Um, they don't have the same SUV lineup they had before, but I think they've done well. And also remember too, a lot of Ford's profit comes from overseas truck sales. So, one thing too that I haven't mentioned also with this one is remember, they get a lot of stuff with fleet vehicles overseas. Does a weak dollar help or hurt Ford? I'll let you answer it. I'm not going to answer that question, but does a weak dollar help or hurt Ford with other countries buying things from Ford? So think about that one as well. Anybody else put anything in there? Bronco, government motor? Yeah, government motors, right? Exactly. Starbucks? Yeah, I could look at Starbucks. Let me see. Starbucks. SBUX. Uh-oh. Hello? Hello, little one. Now my daughter is up. She's like, I'm going to trade Daddy too. Come here, Jijen. Come here. Oh, she's coming to take stuff and leave me. All right, let me pull the full feature chart up for Starbucks real quick, and then we will call it a day. So, I can tell you right now on Starbucks, no thanks, I'm not interested. All right, so Starbucks. All right, what is this called, guys? This is a parabolic move, right? Parabolic move. Never a fan of when you see something like that it just stands out on a chart and you're like, holy crap. And again, it went almost into a level. Look at this. So, not ideal, but again, this is one of those situations where you like to use options. So, here's a level that we had before, okay? Again, we had a drop, we had a base, we had a big push down. The last time that it hit this level at 79, it collapsed and got forced away. Now, this time in one candle, in one 4-hour candle, it shot straight up again. Now, it did go above, and again, that's why some of these positions are more candle-based. But for me in Starbucks, I would have to say that I would be more interested in shorting this one, buying a put. Again, earnings were a couple days ago. So again, with earnings being a couple days before, the volatility crush has gone away. It's more of an opportunity for you to be buying. Now, Starbucks is also another one of those things that you have to take a look at. During this time, this period right here, and again, this is a 4-hour chart. I can drop it to a daily. Daily's fine too. We can do it here on a daily. You can see that price was starting to push back up again through this time frame, right? And again, it's definitely not at all-time highs, okay? Starbucks is kind of the same idea for me. With school and virtual, everything coming around this fall. I don't know. Starbucks is one of those things. Are more people going to be leaving? Are more places going to close down? Are more places going to open up? I mean, I don't know. I mean, Starbucks have drive-throughs, so that does help a little bit. But are more people going to be staying home? Are we going to be shutting things down again? I just don't feel that, with them shutting down, like you say, I mean, look, this is Starbucks over the last, really since, March timeframe. Here is what happened last time we shut the economy down. Starbucks went from the 90s all the way down into the 50s, right? This is COVID, right? This is, we're going to open things back up again. And then we have September coming around again and a large move up in price. I'd have to say, if anything, I'd be more pushing this one back to the downside. All right. And again, a lot of that is based off of that type of jump up. All right. So for me, buying puts probably not a bad idea. Again, moving this thing back down into the, kind of 75 range. I think 75 range will find some stabilization. Other areas that, again, you got to mark off is, this stabilization right here, I think is an area that you'd want to watch. But as far as top and bottom, like I said, there's obviously a minor level sitting right here as well. And this would be a parabolic retracement trade in Starbucks. I'd play it with options, probably buy a put, or even, you could even do a spread. A spread would actually probably make it a little bit cheaper. Since it's only a $5, it's only a $3 move. You can buy, I mean, I guess you could do the 80, but it may be a little bit much. But yeah, you could put something in here. There's a smaller position in here for spreads to the downside. All right, guys. So with that being said, help. What do you need help with? Someone's like, help. I have two birds, Chem Life. Actually, there's two conures sitting behind me, and they really enjoy trading. Somebody actually commented earlier asking if they, sold advice or if they were advisors. They've actually chirped down a whole lot right now. When my daughter walked in a second ago, she just woke up. They saw her walking in, they got excited, but they're actually being pretty quiet now. They like to trade. On Anheuser-Busch. All right, hold on. Let me pull that one up as well. And this will be the last one, and then we will get rolling here. What's his symbol on that one? There we go. It's a bud. Yep, I got it. It took me a second, and I was like, oh, yeah. Drinking. All right, let's pull this across. All right, so I feel like I should do just like a stock day, right? I feel like I should do a stock day. You call the stocks and I'll give it. So kind of the same situation. This thing popped up. I mean, look where we're at right now. Again, on a purely technical level, not talking about their beer or anything like that. The last time the price was in this level, again, it was turned and pushed back to the downside. It also stabilized to the downside in this level right here. So again, it's been an area that, I forgot that I had to double click on this one. Right in there. So here's kind of the range on this one. I would say that 55.73, any push below, again, if we get a retest, I would say I'm probably more bearish this position. When we get back down to the 53.75 level, again, it's stabilized here. We gapped up to it. It respected it. Buyer stepped in again. It did it again, and then boom, it gapped up. We hit that level again, and then popped higher. So, as far as a technical level goes, I think that you need to be looking for short-term shorts at 55.71 and longs at 53.80. Things have, this one tends to repeat itself, a lot of the patterns, right? Again, kind of high, pushed down low, gapped high and went low again. This one was kind of low, stabilized, but then high and then low again, and then a big spike up. This one seems like it wants to pull back again. Just again, it was a crypto, guys. There are 30 people speaking about crypto. Okay. Don't care. So yeah, I would say I'd probably be more bearish this one as well. Now, what will this do? So think about what are we hearing in the news right now? Yes, we got a nice little pop up there. Everybody thought it was bad. Could this have been a short squeeze? Yeah, the answer is absolutely. Things are starting to close back down again. Okay, I'm going to short it. Boom, pop back up again, take everybody's shorts out, and then again, we will see kind of a rollover. So again, the closing economy, I don't think helps. Obviously, bud and alcohol is, mental health for adults when we homeschool. So yeah. I would say in the long term, just thinking about the different factors out there, I would be short kind of an intraday trading, but I don't think it's necessarily a position if you're interested in holding it for a longer period of time. Obviously, bars and restaurants being closed down is bad, but liquor stores, they won't close those things because that's considered an essential service in many states. So yeah, it's good. Pre-market is 56. Yeah, 56.66. Yeah, I mean it's we're up here, so. There's where your buys and sells are, right? So yeah, 56, yeah, right in here. So yeah, so it's already out of the range. Yeah, it will. I mean, it's going to move, but remember, until we get the opening print, there's really not too much you can do with it, right? I mean, you said 56, so yeah, so we're up in this range, yeah. So it's looking for a pop, but again, I wouldn't be surprised that look for a rollover. And again, if it's already popped higher, I mean, there's a zone sitting right here at 57.75. Whoops. Right there. Nope. I don't need that alert. All right. Now, here's the other thing to think about as well. Okay. Does pre-market range mean that it's going to open at that price? The answer is no. So just because its pre-market range is higher, it could also come back down again and be back in this level when it opens. And again, there are different proponents to this as well. Some people will say, I don't care what happens in off hours. I only care what happens in market hours. Some people look at 24-hour charts. That's why I personally like currencies, because you don't have this is annoying. This pop all over the place, jumping back and forth. I prefer I prefer the consistent charts, and even in futures. That's why stocks for me is just not fun. Yeah, you can see it right there. There's price right there. Right? Price is right there. 56.67. So see what it does right now. All right. Yeah, it can. Yeah, I mean, like I said, it's always sometimes. But like I said, if you're looking for the next clean level, this level has been hit, right? It has been hit before. This is an absolutely clean level. So see what it does. See what it does. Like I said, I'm analyzing something in off hours when it's, you should be doing it as soon as the market pops, because this chart is a intraday level chart, not an overnight continuous, because I refuse to pay for TradingView. All right, guys. So with that said, it is 9:11. I'm gonna go feed the girl, so I can get back in time for the open, and again, that 10 o'clock trade this morning. I will be back on tomorrow. Again, be very, very cautious today, guys, with that FOMC lineup. Don't get overzealous. Don't get your positions in and then walk away and forget what was going on. I would definitely check the charts at 10:30 today. Trade this true oil statement. This is going to be very interesting. And remember, there can be a pop at 2. And then this press conference is where a lot of the gems come from. This press conference, if they mention anything about being hawkish for interest rates, someone's going to ask a question and ask them, what are they projecting? What are they looking for? So, like I said, fireworks later. If you have positions on that are positive, make sure you absolutely protect them. If not, just take them off in general. Again, use things today that have limited risk. Best way to do it with FOMC. It may turn out to be a bust, but if you use limited risk and nothing happens, you're good. If you do not use limited risk and all heck break loose later, again, the worst thing you want to do on a Wednesday is get a margin call because you didn't realize how much risk you had and price gapped way beyond where your stop loss was. So be cautious. Good trading. I'll be back on tomorrow, guys, at 8 a.m. in the morning. We'll go from 8 to 9 tomorrow morning as well. Remember, in the overnight as well, for any of you guys that know how to trade currencies or look at currencies, it's going to be slow. Germany has that GDP number. Here it is. Germany has a GDP number, which is supposed to be negative 9%. So again, I expect this euro to be beat up in the overnight as well. All right. So I'll catch you guys tomorrow. You guys take care.